So it is Monday, June 8th, and I'm trying to do something new uh for the, you know, continuation of this year. Just want to be as consistent as I possibly can with my uploads and postings. So one of the things that I'll start doing now on my page is just start uploading weekly, I guess, case studies in a sense, and just showing people things that I am doing within my evaluation phases of my prop accounts. Pretty much how I'm managing my trade positions, how it is that I see the trades that I possibly take. For those of you who have been watching me for a while, um, and have witnessed me do these things live, if you're part of my community, then you know exactly that the things that I showcase to you guys here, yes, it is now in hindsight, but it's very much real. It works. The concepts that I've learned to utilize from ICT, the man himself, they work. And I just want to show you pretty much what I've been doing, honestly. So this will just be catching everything up to speed with how everything has been um, after making the money that I've made from Top Step. So going into my P&L tracker, I keep these things on Notion. Give me 1 second. So first we'll start with Top Step. So with Top Step, I received a number of payouts. I don't really like talking about things that I've done from last year, but last year I requested over one, two, three, four, five, six payouts. And out of those six payouts that I accumulated last year, they were pretty heavy, but I was able to make $23,363 after taxes. Them taking their 10%, that left me with about 21,555 repeated. So that's what I made last year from Top Step alone, roughly about 21 grand, or 23 if you want to factor that in. But they took away the percentage of that, so let's just say 21. So I averaged about 21K last year, and then going into the new year of 2026. And these are some things that I have not done myself yet, because I don't really add up, all of the money that I make from accounts and then factoring what's being done in my live account. I just, manage things accordingly. Um, but for the year of 2026, leading all the way up until my very last payout from Top Step, which was March 30th, I requested one, two, three payouts from the year of 2026, which I've pretty much cleared a what a six-figure month within those three payouts. So the first one was about 1,200, really 980 after the 10%. Because I've made too much money from Top Step, so now they're starting to take their 10% from all of my payout requests. So I just keep track of the payout requests and then the payout amount received. So the first one was about 1220, $980. March 4th, we had a 2400, and these are added up going across multiple accounts. So these are complete totals being added up from about 4 to 5 accounts roughly. I say on average, I always keep at least like 4 to 5, and I take payouts from out of those 4 or 5 accounts being copy traded together, which is why I'm able to net profit so much money. So $2,400 was made, about 2,048, and then March 30th we had $6,164.84, which I net profited about $5,528, $428, and adding everything up for the P&Ls, I've pretty much made over $9,792.82 from Top Step, but the payout received amount is really 8,456 because Top Step takes their 10%. Now, adding all of that up, I've pretty much cleared over $30,000 from Top Step alone. This is not factoring in what I've made from out of my live account. So when I factor in what's being made out of the live account, because I'm doing the math as well, this is my first time actually adding up these numbers, so you're here right along with me. My live account, these are all of my requests from out of my live account that I keep track of. I believe this is currently up to date. My last payout amount from out of my account was June 5th, which was on Friday, for about $400. But adding it all up, since I opened the account back in March, April, May, had my live account for about 3 months now. So half of the money that I pretty much received from Top Step, I've put into the live account. So I have over 14 grand that is pretty much sitting liquidly inside of a live account through NinjaTrader, and I trade that account passively whenever I see good trades, anything I could capitalize on. I take it. Don't really need much, as long as you're making like $300 to $400 a day, you're gonna have six-figure months. But there will be times where I make even more than that, and I take something, out from the trade, and just pay myself for my time. So over these past 3 months, I've pretty much made $8,208.92. So when you add both of those up together, I have pretty much net profited about $38,000. So this is truly what I have made from last year and going into this year put together, which is pretty nice. So $38,219.92 is the money that I have made from trading within a entire year, and then going 6 months into 2026, I've made over $38,000 from props, which is where majority of my income has came from, and being able to use that income that I've obtained from props and then putting that money into a live account and then having that money grow itself as well. So when you learn how to play the game with your money, there's certain things that you can do. So like, take for instance, when I buy prop firm accounts now, it's not really an expense that's coming from, let's say, working a job. You go and you work in a job, and you make your money, $400 out of your paycheck. That's a lot of your time, that you've invested into your job. Some of you guys are probably working like 7 to 10 hours, maybe 11. $400 is a lot of your time being invested, or well, being taken away from you from out of a check to go and buy, prop accounts. Well, I don't have those issues anymore due to the fact that I have money or assets being put into other places where I receive money back from these assets that are growing equity on top of them, and I'm able to use that new grown equity to go and buy prop accounts and then do what I need to do to pass them. So it's really like nothing I ever do at this point is really a loss, because I'm always making money in some type of way. I wish I could probably explain my way of thinking about how I keep this cycle just going and constantly upscaling all of my accounts. But that's pretty much like how I think about it. So like, if I have to buy prop accounts, mind you, I do have, 2 prop accounts right now that I am working on from Top Step. They're a 150K DDL accounts from Top Step. That is, a new feature that they have going on, to where you can pretty much set a daily loss limit, have a daily loss limit be applied to your account, and it makes obtaining your evaluation account cheaper. So very quickly, if you're not already familiar with Top Step, in their Discord. They talk about a lot of their promotions and announcements through Top Step itself. So right here on the 2nd of July, um, I'm sorry, not the 2nd of July, but the 2nd of June, Top Step pretty much released um, double the discipline, double the payout caps. Starting June 2nd, when you purchase a new trading combine and add a daily loss limit, which is DLL, at checkout, you unlock 2 times the payouts. We're rewarding responsible trading by giving traders who choose a DDL the opportunity to double payout caps. Now, you add a DDL at checkout, you unlock 2 times payout caps. It's available across all of the trading combine sizes, and it's for new purchases only. And it's a limited time offer. So, beginning June 2nd, the monthly subscription price for the 150K standard trading combine, they're letting you know that these prices and things of that sort increase. But if you were to purchase accounts prior to June 2nd, you will be rebilled, and the reset will be the legacy price. One thing I can say about Top Step is when you do have the old previous legacy accounts before they start releasing updates and changing rules and things of that sort, the old rules still apply to you. You know, think of yourself as being like an old head, but once you blow that account, those old rules no longer apply to you. You know, you've lost a legacy account that was potentially really good, and now you have to move over to new accounts that have new rules and regulations and things of that sort, and now you can't avoid it. So that's one of the love and hate relationships about blowing an account and having to get a new one, is that you lose that legacy factor that account has. So I know most people, they probably don't really give a fuck about it, but let's be for real here. Nobody wants to just sit and blow accounts and just buy accounts all day. But other than that, yes. So I got the DDL account. I applied it at checkout, and it just made the evaluation a little bit cheaper. So these evaluation accounts for the 150Ks, they run me for about $200 a pop. So I'm paying $400 for 150K accounts that have $3,500 in leverage, and then they also have a $3,000 DDL limit for the day. That is not something that I should ever reach on a day, but I do keep my risk manageable. So $3,000 is way over what it is that I typically risk on a trade. So I never really have to too much worry about reaching that $3,000 limit. I keep my trades. I keep my risk management, you feel me, very firm. There's only a certain amount of money I'm looking to risk per trade, and when I see my setup, I'm gonna execute based off those conditions that I see the market given to me or making, so that I can envision my setup becoming true. So I usually risk no more than about 50 points. Within a 50-point stop, the amount of micros that I'm using, because I do primarily trade micro NQ, though nothing that I'm doing on micro NQ is any different from NQ itself. The only thing that changes is the leverage for that pair. So I like trading micro NQ because the leverage is a lot more manageable. You can make a mistake or two and not have to worry about losing your entire account, because again, these are prop accounts. It is not your money. None of this shit is honestly real. And you definitely want to be able to take advantage of the fact that these accounts are dirt cheap and they're giving you so much money to trade with. The best thing that you can do is make sure that you fucking pass them. So with that all being said, now I can go off into talking about what happened last week on Friday. I also did trade Monday as well. I haven't marked that up yet, but I will be getting into that. But Friday was pretty much one of my biggest trades ever that I've called out since I've been trading. The market dropped over 1,300 points on Friday of last week. So I definitely want to do a weekly recap going into Friday's delivery, but just understanding what the market did prior to the start of its initial week that led me to taking this setup here on Friday, uh, which was a 1,300 point drop on NQ. Cool. So one of the things I will do, since I do have the premium version of TradingView, I don't want to see the very next candle opening for Monday. So I would take the replay bar and I'm going to take that completely off. So that way it only shows the bar for Friday, which is exactly what it's doing here. So this is that entire range of the daily's PL3 for Friday that I'm pretty much showing you here on a Monday afternoon, but the chart replay is allowing me to go back into the past slightly and recap of what happened for the range, for the weekly range of last week's PA, now that we are pretty much heading, well, we are in a new week. But this is just an understanding of what led me to look for, the certain trade positions that I do place myself in to capitalize on the market's directional bias. So looking at the range from Friday again, before I go off into Monday, Tuesday, Wednesday, Thursday, and just looking at those individual days that created this structure that we've gotten from a weekly perspective, but it also leads into how we get the setup for the daily's PL3. So it was 6,578 ticks. If you do not understand ticks and you more so prefer points, it is very simple to convert ticks into points. All you have to simply do is divide by 4 ticks. When you divide by 4, I'm sorry, not 4 ticks, but it does take 4 ticks to create 1 point. So it's just simple math. If you were just to divide by 4, since it takes 4 individual ticks to create 1 point, that would tell you exactly how many points NASDAQ moved within that 6,578 tick range. With that being said, 6,578 ticks for a daily candle is 1,644.5 points. And that is a very huge range on NASDAQ. This is probably one of the biggest ranges I've ever seen on NASDAQ just for one day. I haven't seen a candle like this yet. So it was very nice to witness and experience and to get into this with a solid foundation behind why I'm taking a trade, because it's never random with me. I'm never just sitting here and getting into the markets and just executing off of anything. All of these things that I'm doing, they come with a predetermined thought process behind why it is I'm looking for what it is that I'm looking for, and I just execute based off the things that I love to see when I'm applying my strategy to my market conditions, or what I interpret to be bearish market conditions. So before I get off into Friday, which was my very, very big trade, and what it was that I was doing here, I'll go ahead and just go off into the beginning of the weekly range, and I will keep the time frame interval on the 15-minute. It's a nice chart to look at PA, but when you understand the way that I trade, and you have a very, let's say, very deep and technical understanding of PA, you would start to understand that price is fractal, and it really doesn't matter what time frame you are on. You're just literally looking at individual candle arrays from an hour, 4-hour daily perspective, and they're being refined within these 30-minute, 15-minute, 5-minute, 3-minute, 1-minute ranges. So I'm not really looking at 1-hour lows, 4-hour lows. Yes, I am looking at these candles in a whole to understand how their structure is created, but I'm not, a support and resistance trader, if that makes sense. The way that I trade is pretty much using time and blending that with price. If you've watched ICT, then you know exactly what it is that I'm talking about. Um, just those two things alone give you enough prognostication to be able to capitalize on a market's trend direction, because you understand the conditions that have to be set in order to participate in the market in that newfound direction or continued direction that you are looking for. So going off into the opening range, some of these things I probably have to just lighten up for you guys because I can see it visually. You probably can't, so I'll make some of these things bright. So this is pretty much where we opened on Sunday, which was the 31st of May, 6 p.m. Do understand that 6 p.m. on a Sunday is the opening of Monday's range. You don't really necessarily factor in Sunday as a trading day, but you can trade on a Sunday because the market opens at 6 p.m. Now, when the market opens in Asia, every Asia session, that is the complete start of a new trading day. So you will have when Asia will overlap within the previous day. And when you have that overlapping of Asia tying into the previous day, that is pretty much the opening price range for the next trading day that you are not in yet. So with that being said, when the market opens up on Sunday, that is pretty much Monday's entire range from the Sunday opening or the opening in Asia. Asia is the true opening on a candles range for every single day. It will be the opening of the week, the opening of the month, the opening of the day, the opening on the 4-hour stick, the hour, whatever it might be. Asia session is a very important session because it literally opens your trading range. It creates the remainder portions of your candles throughout the day. It all starts there. So Monday, Sunday is pretty much, that ties together. When you have Monday's trading session and you go off into 6 p.m. and the market opens back up on that Monday, that opening on 6 p.m. is really Tuesday's session. Same thing applies with Tuesday leading into Wednesday, Wednesday leading to Thursday, and then last but not least, Friday. Thursday leading into Friday, and then after we get that close on Friday at 5 p.m., which I will pretty much mark that off here, the market is done. So this is the opening on your week. This is the closure on your week. And if I was to change this daily PO3 candle to the week, you will understand exactly why it is I mark up these individual trading sessions for every single day, and that keeps me in line with the weekly range, the monthly range, the daily bias of what I'm expecting the daily candle to do and where I'm expecting that daily candle to trade down into, so on and so forth. So looking at these individual trading ranges, this is something that is known as IPDA. IPDA is pretty much how I am using these delineated time intervals to understand how the algorithm is trying to move for the day. Now, I'm not going to go into everything that IPDA includes. I'm just showing you how it is that I am trading these sessions and how I'm able to capitalize on these moves, primarily the one that happened on Friday. And then from there, I'll show you my P&L with my prop accounts, things of that sort, and just go on from there. So we opened on Monday. And I will brighten this line. Market was open here. I'll zoom in. So you see here how Asia, we opened, we made that low in Asia. And once we made that low in Asia, we swept that Asian low at 9 o'clock. At 9:30, which is pretty much when we expect the market to open, we whipsawed back and forth, created a bottom, which created the low for Monday. And after we created that low for Monday at 9:15, which comes in at 30,291 flat, we rallied, we soared. Notice how the market made a bottom, created higher highs, and took buy side liquidity, resting at the top of our old structure as it's creating the new structure on the right hand side of the chart. So pretty much traded into all-time highs. So at one point in time, these coupled groupings, these coupled highs here, that was at one point in time the high of the day back in Asia, and we ended up sweeping that high of the day with the newfound structure that was created in New York PM session, because that's when that high was taken. So after we took that high and created all-time highs again on Monday, we ended up sweeping that high on Tuesday. So notice how we go into Tuesday, and I'm just color coding these lines, trying to make it just as clean as I possibly can for you guys. So we go into Tuesday, same concept applies with Asia because that is the actual opening on the candles range. So we open in Asia bearishly, doing what? Trading down, and we create a bottom here within Asia, which is truly the low of the day. So we created the low of the day, these little double bottoms here, these relative equal lows. But this candle low is lower than the previous buy candle low on its close. So this one came in at 3317.75, which is 3 ticks. And then this low came in at 3318 flat. So this one traded down a little bit deeper, and this one remained a little bit, further up. So it's not really it's not even a point difference. It's literally just a tick. So 0.25, just one tick, that slight difference. But it created a double bottom here. Now that bottom here was made with an Asia session, which would also be the low for Tuesday. Now, once we bottomed out here, we rallied. We took old highs, rallying, taking out buy side, resting above Monday, which was all-time highs. And in that delivery going higher, look how our delivery on Tuesday was very choppy. Nothing showcased itself in terms of getting in for a trade idea until 9:30. Once the market opened at 9:30, notice how we had that very quick sporadic move to the downside, and then it flipped, went right back up, and took Monday's high on Tuesday. So we remained bullish even in the choppiness. Now, Tuesday's high is now all-time high again, and now we're going into Wednesday. Notice how we just keep toppling the high over and over again until something changes. I'll make this one a little cyan, or I could do pink. Now let's go with pink. So I'm just color coding the individual days, and then I'm adding the Asia open to the individual trading days as well. So we open here in Asia, we get that sweep of Asian high here at 6:30. We create the low within Asia here at 7:15 p.m. Boom. Draw a line out, connect the dots. We sweep and clear. And then the market comes down. So notice how it does that on Wednesday, how we trade above Tuesday's high. We open at 9:30, doing what? Sweeping buy side, resting above our current session high. So we're taking all-time highs on the same day and sweeping that all-time high and coming down lower to take something that's resting below, such as sell side liquidity, SSL for short. And then one of the things I do is I add the coordinates, because I like knowing the tipping points of my price points. So 30,556.25. At 9:30, we open bearishly. We continue to move bearishly into taking out resting areas, areas that have sell side liquidity, pretty much resting below old lows. So we travel back into these areas. A lot of times you will see prices pretty much magnetized to those zones, or not zones, but those price points Once it's pretty much picked its direction, you're looking for price to expand back into these levels. So from that open after that sweep, and you don't have to trade, the sweep, even though that is a lot more of the riskier setup. You could have just simply waited for the break. So we have that first initial break of structure here. And once we have that first initial break of structure here, notice how we formed a lower high. How do you know it's a lower high? Because this high, which is our highest high on our trend direction, this swing high has failed to topple the high of the day, all-time high that was made here, which is also the high of the week. So we have a couple things going on with this area. We have all-time highs here. We have the high of the week, and we had a sweeping of what the old all-time high was here in this initial Judas swing at 9:30. So taking the buy side, resting above, enticing people to get in the longs, thinking all-time highs are going to continue to just keep rallying. What entice traders to get in, and making you think that, okay, we're going to break all-time highs and continue going higher. And no, it didn't. It caused you to get in and completely flipped on you. And this is a form of delivery that you will see price do a lot of the times at 9:30. Well, it will rally up in the conditions, since this is pretty much the conditions that form a bearish trade idea. But it will rally up at 9:30, take an old high. In this case, it was the buy stops resting above the previous high, all-time high. And in that sweeping of the old all-time high, we created a new one. In theory, that also was, the high of the week. And from there, price was respecting that range and coming back down because it no longer wanted to be up here. So at 9:30, we'll get that Judas swing, that sweep, huge displacement going to the downside. Literally within 15 minutes, we've traded into this area of where sell side liquidity would be resting within the marketplace, which was that 566.25 level. So the entire range on the 9:30 candle after the sweep, which I'm about to do here, was about 312 points. If we take, our entry, or the way that you would like to get in, which is, at a break of market structure. So this low here at 845, and that trade straight through it off the first initial 9:30. Just you capitalizing off of, after getting in after the break, you could have still caught 133 points of that trend going smack downwards at 9:30. And then once we came down here, it created the low at 9:45, which is also going to have, some form of importance, because when we correct and make these long pullbacks away from these lows, and when the market is bearish, we slowly but surely work our way back down into these areas that we pretty much rallied away from. This is just how retracements work. So you have to understand how to capitalize on these, retracements in the form of understanding, like, okay, this is a correction. The trend is truly, bearish. So we need to see the market pull back, as massive as it might be, and then we want to see price fail to go higher once it trades into, a particular level. So these last two up close candles right here pretty much create an orb. And when we came into this orb here, you can notice the consequent encroachment that we have within that area, and price pretty much respected it in a sense, creating a lower high. We have our break of market structure again, and you sell short here at the break of market structure. So your entry will pretty much be at 3699.25. So we have break of market structure, and this leads to our entry after the retrace. So entry model, this is a part of it, and our entry price is 3699.25, with a 50-point stop after that initial break, and forming this lower high here. That is well above the placement of this lower high, which is a great area for you to set your stop. So right here, I will start changing the stop so it is directly accurate on the 50 points. And the target will pretty much be the swing low here at 945, which is 201 points in 2 ticks, 0.50. So just from this trade idea alone, waiting for the break of market structure, the retest, the failure to go higher, and expecting that we're going to get continued closure below, this here alone was already a 1-to-4, risk to reward. Risking 50 points to catch 201 points off of this corrected low. Price pretty much got down here again around 12:30, failed to trade underneath that low, retraced again, creating more liquidity for us down here, and finally, slowly but surely working its way back down into this level again, after rallying against it. So same thing applies. One of the market conditions that you'll see happen a lot is when we sweep old price highs and the market returns back into the range. This is one of the ways that you are pretty much able to pinpoint where you should be seeing reversals set itself up within the marketplace. So I'm highlighting some of those things for you in hindsight, but keep in mind these are the things that I have been noticing and recording and watching in real time. Yes, this is now in hindsight, but all of these trade models that I am showing you are things that I have done, well, entries that I have taken in real time and recorded and literally post all over my social media platforms for you guys to pretty much watch. So, little do you guys know, there is a lot of information that you could take out of just watching my videos, seeing how I enter into the market in real time, and then how I'm managing, my trade positions to be able to make the money that it is that I am making. And it continues to expand all the way down here, leaving you with a last exit at this low at 367.25, and it trades right through that low one more initial time, giving you a full complete exit and a possible TP here on this trade idea, which hits for about 331.50 points, which is a 1-to-6 risk to reward, and you close here for the day and you're done. That's pretty much it. So we closed at 5. If you were trading a live account, market opened up back at 6, trades all the way back down, and now we're going to pretty much Thursday's trading session, because this is Asia. So Thursday pretty much did nothing but just continue the initial delivery that we already were in. The direction is bearish, so all we did was just continue off of that leg of structure that we created on Wednesday. As you can see, the market came down to this area at 10:15, which is the night of Wednesday after we already traded the afternoon session. But this is pretty much the start of the new day for Thursday, but you're looking at that Thursday delivery on Wednesday because the market opens in Asia. That is the start of the true day. Now ICT teaches you 2 forms to look at that, which is after midnight 12, but the true day is Asia. So we create that low here, at 3352.25 within Asia session, which is identified on Wednesday, but this really is Thursday's trading session because this is a new day in terms of trading terms. We sweep Asia session high, rallying at 10:15, about 193 points, 4 hours and 45 minutes into sweeping Asia high at 3 in the morning. So now we're starting to trade within that London window. And after we sweep that high, the market breaks itself right back down and tags the 352.25 level. So notice how when we create these pullbacks, these huge swings back up, and we're bearish on the day, we come back and draw ourselves back into these lows to continue the expansion on that daily PL3, that 4 hour candle, that hour candle, so on and so forth. And seeing, how we got in on Wednesday, all you could have really did was just held Wednesday's trade into Thursday's session. Market never came nowhere back up towards your entry. And going into Thursday's price delivery, we pretty much just had a complete meltdown going into London session, and then into the early stages of New York that overlap. We were pretty much consolidating. As you can see, price was sitting within a trading range here. Let me grab the box, but price was pretty much sitting within this range here. I'm just notating off the highest close of the range and the lowest low, and you can see we're just sitting within this tight range. Market going up, making a high here, low within a consolidated range, and we send up and we break out of that consolidated range here. Trying to notate everything for you guys. And we retest that as a level of support. So that resistance is broken. Retest it as a level of support. And the market full sends into trading above the Asia session. I'm sorry, not Asia session, but the high that was made within London session, which was also the high on the trading day. And that high was pretty much swept. In the sweeping of that high, notice how price chooses, or noticeably always consolidates when it takes from a PD array. In this sense, it's not a previous day array, but it's Thursday's high on the current trading day. And we get up there and we sweep that high. The market consolidates, sits within a holding pattern, and then we come and close right back into the range under the red level, and the market starts to sell off again, the same way how it's been doing. And where do we go? We rally into Thursday's low that was created here at 30,152.25. Now, leading off into the day, Friday, this entire trade from Wednesday to Friday, Wednesday, Thursday, Friday, all of these ranges tie into each other. Wednesday gave us the high of the week. Thursday and Friday gave us a continuation of that expansion of that weekly candle, which is being showcased here on the right hand side of the chart. Now I can switch this back to the day and it will just show the range on the day for Friday, but I want you guys to understand how PO3s work, how candle fractals tie into each other to make these weekly ranges. And it's happening on these individual days that you're pretty much tying into each other. So with that being said, when you study these concepts, or IPDA enough, you'll understand where the highs and lows of the week, the highs and lows of the day, etc., are forming on these individual trading days, which makes it really seem as if you don't really need to know too much about previous PA, or what's happening 2, 3, 4, 5 months ago. I'm not even looking that far back. I'm looking really within weekly. I'm really looking no far back than probably like 3 or 4 days, and that's really because I'm looking at the previous trading ranges that price has gyrated in and out from on the current week, and noticing what are we doing within the ranges that are created on the day, because they start off small until the candle actually expands. And in that expansion, which is when you notice price sitting inside of a holding pattern, that's when you pretty much expect your new move to unfold and showcase itself. So since Wednesday, we've been completely bearish. All we did on Thursday and Friday is get a continuation of Wednesday's trade idea, and taking the fact from what I've seen Wednesday leading all the way up until now, this was not just a 1,300 point trade idea within one day on Friday, but the entirety of the trade that I've been managing, this has been a 1,931 .25 trade idea, and I've just been mentally, holding bearishness in my mind when I was trading, this week, and well, this week that passed, because now we're going into week 2 of June. But when I was looking at the markets, Wednesday, Thursday, and Friday, I just had a complete bearish mindset and expecting that the weekly candle was going to continue to just keep expanding itself lower. The only thing that I was pretty much waiting for was for the delivery of news. So do understand that technicals within the market is nice and all, but you still have drivers within the marketplace that do have some form of importance behind how the market may potentially move in the future, once those openings come out. But going off into Wednesday, we leave these things for you guys to study, but I'm just here to show what happened for the week. But Wednesday we had ADP, non-farm employment changes, and you can go to that candle, at 8:15, mark it up, look at it, see how that candle looked, reacted at that time of its delivery. Same thing with Friday. Notice we had a couple of things happening here on Friday. We had the AHE, which is average hourly earnings. We had non-farm employment change, and then we had unemployment rate, all being released at 8:30. So with that being said, I was up bright and early, like 3-4 in the morning, pretty much waiting for non-farm payroll and then those other two news drivers to release at 8:30, so I could get a feel of what the market was trying to do. So if you pay attention to anything I post on here, then you would see that I did take this trade. I've recorded it as well, so it's live. And I was sitting inside of shorts since 8 o'clock in the morning, holding this for about an hour and a half before 9:30's release. And unfortunately, though I entered in under this pink shaded areas low, because I'm pretty much marking off the consolidation and expecting that once price breaks out of this holding pattern, and if we do come back down here and retest this low, I'm getting in for shorts. So I got in for shorts. I was holding the shorts all throughout the day, trying to catch that the sell side. Well, the move I was expecting to happen at 9:30 pretty much was a continuation of shorts, but I broke even too soon. There was nothing wrong with my entry. It was the fact that I broke even too soon. And since I broke even in profit, 9:30, it just came all the way up. Like I was up 80 points. I was up 80 points. It dropped all the way down, snatched back up at 9:30, stopped me out while I'm 80 points in profit, and then fell for 1,300 plus points on the day. And I tried to get back in again here when I seen the market pull back right here and was sitting within this holding pattern. um, you're already bearish. So any type of pullback within a bearish market, you already know that it's going to be very short-lived. So you're just waiting to see how far this is going to snatch back. And once it breaks itself down, you get back in on the correction and you trade underneath the low. Very simple approach. It's not overcomplicated. But I got back in underneath this low here. I sold short, and I caught maybe like 30, 40. It had to be at least like 50 points because I was using 2 micros. So using 2 micros, something very small from what I usually risk when I'm taking my actual full complete trade from the top of the key. So since I wasn't able to get my first initial entry into holding, I didn't want to pretty much be trading a falling knife and get caught in some type of whipsaw manipulation, strong move back up. So I got in, set my stop at break even, caught like 50, 60 points, and then I was just done. I didn't want to watch it anymore. I feel like it wasn't part of my trading model anymore. Once I seen the trade pretty much fall apart and trade against me. Well, not trade against me because it still went in my favor, but it stopped me out because of my, you know, because of me breaking even. So I wanted to protect myself, protect my account, and just see positive equity returns in my gains. And since I didn't wait for 9:30 to completely release and deliver on that side, it came back up, snatched me out in profit, and fell to hell. And that was the 1,300 point trade idea. Now, going off into Monday, might as well talk about Monday because that is the start of this new week. So on Monday, I pretty much took buys in Asia, and we've done nothing but just get a continuation of bullish PA from Asia, tying into New York, and now price is just sitting and consolidating. You have to keep in mind, like, there's no news today. If you go check Forex Factory, there's literally no news um, for Monday, like, at all. So Monday, taking away all of this and just setting it on Monday, which is the 8th, Monday, Sunday. There's literally no news. So we're trading in a market that's not really volatile in a sense. Yes, it is moving, but there is no news drivers or anything of that sort backing it up. So whatever the market is doing is just doing on its own willingness. There's nothing powering the liquidity at the current moment. So that's probably why it's moving so slow, very choppy. And then, it did have a massive ass move to the downside. So that is also something that you have to keep in mind. We've literally sold over 1,900 points in a matter of 3 days. From Wednesday, Thursday, Friday, the market has done nothing but sell for 3 days straight bearishness, 1,900 point drop. That is terrible for the market, but good for us as day traders because we're able to, capitalize on these moves, either buying or selling. So a win is a win for us. But 15-minute FEG price trades into after breaking the short-term high. So we had a break of market structure here at 29,288.25. And once I seen that, I got in for longs. So got in for longs. I traded this first initial breakout here in Asia. This is what I did when the market was trading in New York. I'm back here, Asia, that high. As soon as I got that first initial break here, because I wasn't trading at 9:30 p.m., it was right here around the first hour and a half, about 2 hours and 45 minutes. I was trading after the initial opening of Asia. So if I was to take it from here and stretch it out 245 minutes, that'll tell you exactly how long I was in this trade. So boom. So this entire impulse swing here was what I had caught in Asia. Made about $1,200, $1,300 off of this swing here in Asia. Market was just literally giving free longs. So breakout, boom, 263 points within 2 hours and 15 minutes to the top side. I did catch that. And for those who question me, which I don't know why, because at this point I've made so much fucking money off these charts, there's no way nobody believes me. But boom, going to the prop. Some of the trades taken here were not traded on today. The only reason why it says today is because when you trade on a Sunday, that is the trading day for Monday. So these trades were taken on a Sunday night pretty much because it was 6 p.m. You can see right here, I got in for my first trade position, which was pretty much a short. I was looking for the market to continue its bearish continuation. It did not give me that. It started to set up for a long, so I changed my bias and I got in for one mini on NQ. Was in it for about 3 minutes. Like, it was really moving. Caught 50 plus points off of that one mini. And then I got back in with heavier sizing now that I had a buffer backing me up with 3 minis and capitalized off of a scalp. Held it for about 5 minutes. Let price correct. Once it had me in drawdown a little bit and correct and came back up, I was able to finally set my stop at break even, let the rest of the trade ride, and then the trades that I took this morning at 9:57, and then another one at 10:56 was me trying to catch the long for the morning's delivery at 9:30, but I wasn't able to get in sync with it. Kept getting stopped out in profit, of course, because it was drawing up, moving like 30, 40 points in my favor. Then I set my stop at break even, and it just came back down, snatched me out, and just went up to the moon. So I tried to keep catching continuations of the long that I pretty much already had in my mind for my bias to be throughout the whole day in Asia. And I try to catch a continuation of it in the morning's delivery. So I was probably trading a lot, really closer to 11. I didn't really trade the 9:30 move. I was really waiting for 10 o'clock to see how the 9:30 was going to pan out, because I want the othermost confirmation that we're going to be bullish. And once I seen that, we had the breakout going higher. I took it. I was up like 30, 40 points. It came back down, snatched me out, and that's just what it was. So initially, it was really like this leg going up, and then I tried to catch the breakout around like 10:47 going higher, because I assumed, okay, bet, once we rallied up here and broke this high on the candles range for the day, then we'll probably just keep moving bullishly. Don't know exactly how long that bullishness might line up for the day, but it still gave like 130 plus points to the upside before falling. So that's more than enough, money that can be made within 130 point range. If all I really need to be, consistently profitable is like 60 to 70 points, really 50, and keep it very simple. So I was able to break even, move my stops up accordingly, and it came back down and snatched me out. And it's now returning back into the previous range that it's pretty much been trading in after sweeping its old high. So now we'll probably see price trade under here and get underneath this low for the remainder of the afternoon session. Probably going into 6 p.m. We'll more than likely see this low get swept and cleared, and possibly maybe return back into this liquidity void slash imbalance. So that's all I really have for Monday. I was pretty much bullish throughout the entire day, looking for long setups, capitalized on the one in Asia. Couldn't catch the continuation of the one that was showcased in New York. So I closed the charts and completely stopped trading. There's no reason to lock myself out. I'm not that undisciplined. I understand how to take 1 to 2 trades, 3 at max, and capitalize on what's being showcased to me. And if I can't, this is what it is. I take my L, keep it pushing. And if I am able to capitalize on it, then I'm leaving runners and I'm letting my trade positions run for as much as I can get out of it before it corrects. So that's pretty much the entire recap of Monday, why I was bullish, going over the weekly range for the entirety of the 1st of June all the way up until the 5th, I believe. Am I tripping? Yeah. So yeah, the 1st of June all the way up to the 5th. That weekly range has been studied, showcased. A few little markups here for you guys, some food for study, so you could go back and study these things that I am, looking at as well. Hopefully it helps. And yeah, I hope you guys enjoyed the video, and see you next week with another video very similar to this one.